Ladies and gentlemen, good afternoon. I hear you're all waiting on me to buy some insurance. So I had some other business in town, but I said I would not miss this for anything. So I know you're all lined up. Anybody in here to have an insurance? Yeah? But I'm not sure, you know. You don't know what I'm coming with, so you're hedging your bets. All right. Insurance is something that people don't want to buy, right? But guess what? If the house burned down, the car crash, or the man dead, what the first thing people ask? Where the insurance, right? So you would not drive from here to Montego Bay without a spare tire, would you? No, although you have gone several times to Montego Bay and you have never had a puncture. Well, it's the same reason why you buy insurance, just in case. So what is this insurance? Insurance is, simply put, a contract that prepares you to get compensation for the economic loss arising from some misfortune that you have had. So if you bought some insurance on the house, and hurricane mash up the house, then you want to be put back in the same position you were before so you can replace your house. The persons who are breadwinners in a family, they buy insurance because what? You want to provide food, clothing, and shelter and education for those who are dependent on you for support, whether it's the children, the spouse, or granny who brought you up so well. So you want to ensure that whether you're here or not, then something will be there if there is a misfortune. You die or you become disabled and you're unable to work, that there is some funds there to replace that income that you'd have provided. So that's what insurance is. So you have heard a number of presentations about investment and stock market and creating value, and the popular thing these days is wealth creation, or some people prefer to say prosperity, right? But guess what? The best financial plan, if you don't have insurance, can mash up overnight. So you could be a wealthy person and you have the big mansion on the hill, the dream house, the swimming pool, the underground parking, all the elevator in the house, the jacuzzi. But if the house burned down, and houses burn down every day now, for all kind of reasons, can't burn down. Can't burn down. Them said the Titanic couldn't swing either, right? But if any of those misfortunes hit you, and you don't have that money, everything gone down the drain. We saw what happened in Haiti. But the world is so full of misfortunes. You see all them rich people in Hollywood, them movie stars, and the fires that sweep through. These are the realities. So simply put, insurance is the backstop of every great financial plan. Because when the misfortunes strike, there is nothing else that can do the job that insurance does. So insurance is not a new concept. It's an old concept, and it started with the Roman soldiers, where they created a pool. Everybody put some money in the pool when the soldiers went to war, so that when they came back from war, those who lost their lives, there would be a pot of money for the families of those who were deceased. And the concept remains the same. What insurance is a pool? Once you buy an insurance policy, you become a part of a pool, because it's based on the concept that everybody will not have a misfortune at the same time. Hardly likely. Sometimes it's more than the usual. We call that a catastrophe. And there are ways to deal with that, but I'm not going to get into any technical stuff tonight. But in general, every car is not going to mash up on the road. Everybody ain't going dead. And all the houses them not going to burn down. So we are a little more sophisticated now. So We have some bright mathematicians called actuaries, and they work out the risk of certain things happening, and they are the ones who determine what premiums you pay. And they adjust it as time goes on when they see what the actual claims experience is. So essentially, that is what we're trying to do with insurance. Now, there are all kinds of insurance. Two major things, the general insurance and the life insurance. Life insurance, and I have some brochures down there you can take with you, so you can look at some of the details that we spoke about. Protection, first for the breadwinner, because it is your income that provides. So you want to ensure that if the breadwinner dies, money is left, as I said, to take care of those dependent for support. You can get disabled sometimes. You meet an accident, car crash, you're not dead. But you're disabled, you can't work. So disability insurance is important. Health insurance is important. If you're too sick, you can't work. And you know what to deal with the prescriptions, it's expensive, the doctor bill, the operation. Increasingly, there's one that's hitting everybody now, and it's called critical illness insurance. The cancer, the heart attack, and all those kind of things. Cancer is no longer a death sentence. But if you don't have the money to pay for the treatment, the chemotherapy, and everything else that goes with it, you have a problem. You're going to run you anywhere between $3 and $5 million, regardless of your resources, to fight that cancer. So if you buy a critical illness insurance, when the time comes, don't put your family under pressure. Because it becomes more than a financial thing, it's an emotional thing. But if you're a worthless father, when them have the family meeting, what them going to say? May his soul rest in peace. Not true? Right? However, if he was a good soul, we're going to say, no, we can't make daddy go like that. Or mommy. So we're going to chomp up the money. But guess what? It's going to pressure everybody. So you're going to drain your resources, the money you made out of the stock market, the money you made out of the investments, to take care of that problem. When if you had bought a critical illness insurance, you would simply inform the insurance company and provide the documentation, and they would provide the backup. So that's what insurance is all about. On the general side, as we say, you insure the property. Hurricane come, we have been fortunate for a number of years, but we don't know what this year will bring. You saw the pictures in Dominica and all those places, wipe out. It could have been here because global warming is real. I don't know if you're one of those who feel that is something of the imagination, that climate change is not happening. Well, it is happening. We see it all around. You reside by the sea, so you know what is happening with the sea. Sea level is rising. The glaciers are melting. We have an issue with climate change. So we have to prepare for those things. Every day somebody have fire, short circuit, all kinds of stuff. Then you have some awful things happening. People killing people to collect insurance and all that kind of. That's another matter. I don't want to get into that here. Eh? So the insurance thing is a serious, serious thing. Business. When you run a business, there are a lot of things that you have to deal with it in terms of insurance. Let's go back to Montego Bay with that freak flood. Right? So you have your business. Now, the better persons would have said, yes, I'm going to insure the property. I'm going to insure the house. Because I'm thinking about earthquake or hurricane. But guess what? You have a flood and your goods wet up. So you don't end up like them people are drying the stuff in some back road to sell back again because they're facing a total loss. Or, so you have insurance that cover not just the property, but to insure the goods. You order the cement, and the cement come in on the truck, and the truck couldn't take the corner good, and the turnover, or the rice, and what? Man just stop them car and pick up your goods and throw it at the back and them gone. Before you know it, you don't get nothing. So you have goods in transit insurance. So if you have that business, you better find out. There's another one which a lot of people aren't familiar with. A lot of the businesses had to close down, clean up, and couldn't operate for a week, a month, or whatever. There's business continuity insurance that you can get. So they will give you some money to replace the business that you would have lost. So, I don't know that there's any other replacement for insurance you can find. You have a lot of people say that I'm going to save the premium and I'm going to put an investment account so that when the roof blow off, I'll have money. So you're playing God. You know when your roof going to blow off? It could be the first year you've set up that program. Can that 1 year premium fix the roof? No. So it's a fool argument. And I hear a lot of people who supposedly know better have that argument. Let us talk quickly about the average clause, which I'm saying insurance companies trick people with. Now, you have a house that's worth $10 million. And I quoted the premium for $10 million. You say I can't afford that. I'm going to insure the house for $5 million because I can afford that premium. But guess what? The house burned down. And guess how much you want? $10 million. That makes sense to you? That's what all the average class say now. If you never give me the amount of premium for the $10 million, you give me half. What do you expect? I'm going to give you an analogy. There's a famous Jamaican singer who was contracted to sing. I'm saying $100,000. And the man, he said, give him $100,000 before I go on the stage. Them give him $50,000. After half an hour, I'm singing, come off the stage. I'm saying, well, man, no, how are you supposed to perform? Say, you're $50,000 done. Same concept. So you can't get what you never pay for. Because what we said, insurance is a pool and we work out the rates. And if everybody put their money in the pool at the right rate, then there'll be enough money in the pool to make the claim. Because you see, the FSC, part of the FSC protecting you will ensure that we set up the things with the right kind of reserves that when the claims are to be paid, we can pay it. That is their job. So we have to put things in order. We know the crisis we had in the 90s where insurance companies popped down and the government had to intervene and we had to pay for it as taxpayers. We're not getting back to that stage. So we're trying to do these. But a lot of people are under this illusion that insurance companies don't pay claims. And they tell you all the kind of things that they do to ensure that we pay the claims. In 2016, we paid $20.4 billion in life insurance policies, both for death benefit and also people cash surrender. People buy insurance not only for death insurance, no, people like say, death insurance. 60% of all policies are now sold with some investment feature in it. Because at the end of the day, when you no longer need the protection, you want the cash to retire. So a lot of people buy those policies, whether it's an investment linked to the stock market or interest-bearing investments. They also buy a package deal, so they have protection on one hand and cash on the other hand. We paid $20.4 billion out. Health insurance. We paid $17 billion in health insurance in 2016. 30% of those were for prescription drugs, which is the highest portion that we pay. Motor insurance. More people have motor insurance than the other categories of insurance. You know why? Because the law says you have to have it. So we don't have no pension scheme. We have a pension crisis in Jamaica. Under 10% of the workforce have a retired pensions and approved retirement pension scheme. But when it comes to the motor car, although the law says you must have the motor car, we only insure about 350,000 cars. But depending on who you talk to, about 450,000 on the road. Well, them have bogus insurance. Them duplicate the thing and use them fancy technology. But we have something for them this year. But I won't tell you about that yet. The big man will tell you in another month or two. But all of that going to mash up. Technology going to beat you. So, on the general side, in terms of property and everything, we paid out $14.7 billion, of which $9.5 billion was for motor. Now, the FSC spoke about complaints, and we deal with complaints. Every business have complaints. But they can tell you how much complaints they have. 80% of all the complaints in the insurance business are motor-related. Right? We have never had, and you can tell me if I'm wrong, as much as 100 complaints for a year that you have had to deal with. Am I right? I'm going to make him check it out. You know how much motor claims we settle a year? Over 30,000. But guess what? The people who get through don't say nothing, you know. But you know the problem we have with motor claims? When you have accidents, what happens? Everybody right. Everybody right. So if you go to your insurance company and we see the facts and we know you're wrong, we say, boy, I think you're wrong, you know. The man say, whose side you're on? The other man's side? So the difficulty the insurance companies have whenever you have an accident is which side is the truth. And then a whole lot of people don't know the rules of the road. So what seemed obvious to them is not what the law says. So settling the claims very delicate, and sometimes it drags out for months. And then you have a thing called insurance fraud, which I won't even get into. Because man, I try bogus the thing. We're setting for them again this year. So you have all those factors. So you have people who file a claim and they weren't even in the minibus. You have man a limp, come and fill out claim and say, boy, I beat an accident, my back broke. I would squeeze you wrong, I would tape them, I would done tape them, come out of the taxi, a big thing, them just roll up the stairs. And when them ready to call the claim, I said, no, denied. And then we show them the tape, disappear. So we have those things to contend with, but we still try our best to get the job done. So in wrapping up, insurance is called an unsought good. Because nobody wants it, but you need it. So if you have a raft, like in Portland, the man them raft wash away. And what them say? The government must give them back the raft. If the government give them back the raft, them MP, out of the goodness of his heart, or more get the votes. Who going to pay for it? All of us. More taxes, more loan. Government have two sources of money, you know. Taxes and borrow. So the least they can do of both, the better for all of us. Then one day we'll pay less taxes. I hear the minister say no taxes this year. So that sounds like a relief. So you need to take action for yourself. Personal responsibility for your insurance. In my early days in insurance business, selling insurance, one of the ways we used to sell, when you sit down with a man, and you go through stuff and you ask him, what are your assets and what are your liabilities? You say that to the man, and this is always the man get nervous. If you died last night, let us see if you have enough money to pay your bills. It's a serious thing that, you know. You don't want to die. And then your wife, your husband, your children have to be paying the bill years after. So you have a personal responsibility to buy the insurance on yourself, insure the car, insure the house, because that is how you really preserve your financial well-being and become financially independent at retirement. And then the other piece is now disposing of the estate to make the will, so there is no argument about how things to be taken care of. Because sometimes you need to put the insurance in place even if you're wealthy, because you might give it to the children and they can't pay the taxes. Government charges to transfer taxes and the lawyers have to be paid. So sometimes you have a lot of assets, you might need to buy some insurance just to deal with the tax man. So in closing, insurance is a backup. Insurance preserves your wealth. Whether it's house insurance, car insurance, retirement planning, income, you have to put insurance in place in this uncertain world where you know something going to happen. You don't know when and to what extent. Thank you very much. I hope I've made sense to you.